I'm Lisa J. Stocks, and today I'm sharing a milestone when it comes to my portfolios. Another one has just hit 100K. This is a retirement account from job number 2 that I was laid off from many years ago. So, a few weeks back on September 19th, 2025, I decided to make some adjustments to this portfolio. And with the way that the market has been thriving, the two combined has hit me over that milestone. We're going to be taking a look at my performance, what I decided to shift out of, and how I plan on keeping this momentum going when it comes to this portfolio, as well as all of the money that I am managing. As of September 19th, 2025, my account balance was $97,517.14. And then as of October 27th, my balance hit $100,609.27. That's a gain of a little over $3,000 in just 5 weeks, or about 3%. And to put that into perspective, it's pretty much right in line with the S&P 500, which is what I want. I want to make sure that my retirement portfolios, all of my portfolios, are thriving, growing, diversified, not being eaten away by high expenses. So this is not my first portfolio to hit over 100,000, but it's the first time that I was literally waiting for it because I've been so on top of watching, managing, building my portfolios right now. So seeing my portfolio hit that 6-figure mark hit differently. I know that I've been putting in the work, the time, the research in order to strive for this type of improvement. So for a while, when it comes to this portfolio, I was 100% invested into a 2045 target date fund. And honestly, I was okay with the performance. That's why I was not in a rush to make any changes. It was definitely not underperforming the broader market, the S&P 500, the things that I was using as my benchmarks. But then I took another look and I decided that fine is not good enough. I'm trying to make progress. I'm striving for financial freedom. And so I decided to change things up. I moved 45% into a 2065 target date fund, pushing that timeline out by 20 years, giving me more growth exposure. I moved 50% into a US large cap equity index fund at Fidelity, which has low fees and is heavily tilted towards those top performing US companies. And then I left 5% in the company stock from that employer that I was laid off from because I actually still believe in the company and that particular stock is thriving. And none of these changes were made with emotion. I put time and thought and intent into making the changes and making sure that they were in line with my goals, which is currently not allowing any of my money to sit stagnant, to keep evolving and keep improving. And that's exactly what I did. I am going to be watching and making changes over the next few years, knowing that I want all of my money to be working as hard as possible for my future. Okay, so now let's take a look inside of that 2065 target date fund, which is now 45% of this portfolio. So pretty much my long-term growth engine when it comes to this retirement portfolio. It gives exposure to over 12,000 securities, mixing US and international stocks with just a small amount into cash and bonds of about 2%. Here's how the top 10 holdings break down. About 19% of the total portfolio being into NVDA, Microsoft, Apple, Amazon, Meta, Broadcom, Google, Taiwan Semi, Berkshire Hathaway, and Tesla. The fund is basically a one-stop shop for global diversification, which will automatically rebalance over time. And this fund has a low expense ratio of 0.03%. Or 30 cents per thousand. Now let's take a look at what's in that large cap index fund. This is where I now have half of my money invested. It holds 506 different holdings, but like most index funds, it is top heavy. About 39% of the total weight is in just the top 10. Here's a breakdown. More heavily weighted than the target date fund, but many of the same names. We have about 8% into NVDA, 7% into Microsoft, 7% into Apple, 4% into Amazon, 3% into Meta, about 3% into Broadcom, and then smaller allocations into both of the Google classes, Tesla and Berkshire Hathaway, and most heavily weighted into the sectors of technology, financial services, consumer cyclical, and communication services. And when it comes to this fund, it has an expense ratio of 0.01, basically 10 cents per thousand. So extremely cost efficient. This allocation is giving me exposure to the strongest parts of the US economy with the most minimal fees. So between the large cap index funds and the target dated funds, I'm covering US and international exposure, growth and stability, and of course, automatic adjustments when it comes to my investments. So for me, this is what long-term investing simplified looks like. I'm staying on track to see all of my portfolios thriving. I'm prioritizing intentional investing when it comes to my money. A lot of us nowadays are changing jobs more frequently. We're getting laid off. We're having to move. We're having interruptions. And so this is leading to more 401ks, started retirement accounts that we now have to take a handle of. Don't let them sit untouched for years. That money may still be growing, but unless you're evaluating, unless you're paying attention, looking, you won't be sure that it's growing efficiently. That's why we have to set a standard for ourselves. Make a checklist. What are my fees? Is the asset allocation in line with my goals? Am I diversified in a way that is in line with my time horizon? And many other points that I'm not going to get into in this video, but I am going to tag a live stream when I went deeper into some of these issues. By shifting 20 years out when it comes to the target date fund, I added more potential for growth by being much more heavily into stocks, which is my personal preference. And the large cap index fund gives me that focus into those industry leaders in an efficient way. As I said, I'm always monitoring my portfolios, making sure that my money is making more money. So if you're watching this and you have some of those forgotten 401ks, take this as a reminder to do a thorough review and make sure that they are on track. Even small changes like moving to a fund that has a lower expense ratio or adjusting the date of the target date fund can lead to huge differences. So let's keep striving to make progress, keep evolving, be patient and trust the process. Be proud of yourself for never skipping a contribution, never panic selling, and remind yourself that you just need to put the work into knowing what you are invested into. And then from there, let the market reward your patience. Thanks for watching and celebrating this milestone, but the journey continues. Definitely don't want to see it stop at 100K. I know that building from this point is going to become easier, that power of compound interest. So what I'm sharing here is my personal investing strategy and preference when it comes to how I'm going about striving for financial freedom. Consult a financial professional when it comes to making changes that are in line with your financial goals. I hope this video helped you to understand my strategy. If you're not already, subscribe, like, hit that notification, and make sure to leave me some comments letting me know your thoughts or questions about what I shared today. Did I inspire you to check on any of your accounts this week? Let me know. You can support the channel by joining channel membership and check out my referral links in the description and pinned in the comments. Thanks for watching. Okay, bye.